remember, the market cap of silver is the size of a pinhead, and you throw a bunch of money at it, and it doesn't just go up, it explodes higher. This is what they've been trying to hold back. And I think that the big money across the globe understands this. I think they understand that this is a rush to a quiet rush to accumulate the resources. Silver is a necessary element. It's necessary in moving energy. It's necessary in moving civilizations. As dramatic as that sounds, there is no element on the planet that conducts heat and electricity better than silver.
The recent pullback in gold and silver has stirred intense debate across financial circles. After months of steady gains, both metals briefly retraced, prompting speculation that this wasn't a natural market correction, but rather an engineered pause, one designed to give large institutional players, sovereign funds, and central banks a final opportunity to load up on physical supply. When an asset class rises 60 to 70% within a year, a temporary cooldown is expected. But what's different this time is the underlying behavior of global capital. The quiet absorption of physical metal at these levels suggests that while retail sentiment was shaken by the volatility, deep-pocketed entities took full advantage of it. This accumulation phase aligns with what we've observed in official sector data. Central banks continue to buy gold at record pace, while government agencies, particularly in the US and China, have begun formally classifying silver as a critical or strategic mineral. The significance of that can't be overstated. It marks a transition from viewing silver as a mere industrial metal to recognizing it as a foundational element of national security and technological sovereignty. In other words, the pullback was never about price, it was about access. Now, as silver once again pushes decisively above the $50 threshold, it's clear that the correction served its purpose. Physical supply is tightening, premiums remain elevated, and several national mints are already struggling to meet demand. For those watching closely, the story isn't about volatility, it's about the consolidation of power over scarce, irreplaceable resources. The notion that silver's market cap remains the size of a pinhead, as Andy Schectman aptly puts it, highlights just how explosive the next leg higher could be when large-scale capital decides to re-enter. In today's video, Andy Schectman breaks down why this new phase in silver's evolution is unlike anything we've seen before. Stay tuned as we unpack Andy's latest analysis on the accelerating reclassification of silver from an industrial commodity to a strategic reserve metal. If you find value in grounded, fact-based perspectives like this, please take a moment to like this video, subscribe, and share it with others who are following this historic transformation in the precious metals market. We appreciate the support and hope you enjoy the video.
It's important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that. But when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, you know, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise, but here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is, the acronym is MOFCOM, Chinese Ministry of Commerce, has issued new rules regarding the state-traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. When you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. To me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state-managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource or into a strategic element, not just in the United States.
How does that change the game for major dealers like Miles Franklin or smaller dealers at the local level?
It will consolidate into more major dealers, or those smaller dealers would consolidate, in my opinion, because the cost of maintaining an inventory is becoming exponentially more expensive. And with that, you have insurance and shipping and all of the things involved. It's expensive. It's much more expensive than it was to hedge a position at higher levels, takes away some of that risk. But most of the smaller coin companies or local coin shops don't hedge their exposure. So, it's a big deal. You have a large inventory of silver, and the volatility that we've seen where it can fall, 15, 20% in a short period of time. That's enough to really scare a lot of these coin shops out of business. I think it's an interesting thought experiment, but my guess is the higher the price of metals go. I mean, look at gold. A tube of gold eagles now is well north of $80,000. And so how much gold can you really have as a local coin shop, not only from a standpoint of maintaining an inventory, you better have millions of dollars to use, but insurance and shipping and all of that stuff, it's becoming a lot harder. When gold was $1,000 an ounce, I remember my father-in-law sending me a text message, "Congratulations, so gold's finally over $1,000." Well, back then, it wasn't too long ago, a tube of gold eagles is just over 20,000.
As the price goes up, how does that impact the realistic challenges that they'll be facing with shipping valuation limits and things like that?
It's real. I mean, we probably do as much shipping as anyone in the United States on a, that's not a fair statement. Our shipping with Federal Express is as robust as it can be without being someone like Amazon. And so we get all of the discounts that you would get and have all of the insurance that you could get. And, we still don't put more than $150,000 of product in a particular package. You try to ship it by registered mail, the most they'll give you is 50,000. So if you can only do 50,000 by registered mail, you're not even doing a tube of gold eagles. And, that's challenging. The costs are getting more expensive. You look at companies like FedEx, their costs are going up. It's tough. So prices will go up. Insurance will go up. It's real for sure. So again, this further would, I think, push towards consolidation into the larger companies who have the wherewithal to do it. That's not great for the consumer, but it's just the reality of the cost of doing business, and it's increasing dramatically. If it continues down this path, yeah, it would be very interesting if you saw triple-digit silver, where you're talking $50,000 for a monster box. Yeah, it's getting tough, but triple-digit silver really isn't that crazy anymore. Keith Neumeyer was the first one to talk about it, and when you look at the fundamentals behind it, it's not that outlandish to say that.
Andy's point about silver's redefinition as a geopolitical resource captures the essence of this transition. When a country like China, already the world's largest silver refiner, announces export restrictions beginning in 2026, it's signaling that domestic needs now outweigh commercial opportunities. The U.S. has done the same by adding silver to its critical minerals list, effectively placing a price floor under the metal and positioning it for direct strategic stockpiling. The implications are immense. These moves reduce global liquidity in the silver market and tighten the supply channels just as industrial consumption accelerates. In this environment, silver ceases to behave like a typical commodity. It becomes a controlled asset, and the market's paper claims on silver begin to lose credibility against physical reality. As Andy explains, the next challenge lies in accessibility. If silver continues to appreciate toward triple digits, as analysts like Michael Oliver and Keith Neumeier predict, maintaining an inventory becomes prohibitively expensive for smaller dealers and local coin shops. Rising insurance and logistics costs will consolidate the industry toward major distributors, leaving fewer options for average investors to acquire physical metal. Yet amid these changes, opportunities remain. Andy points to junk silver, pre-1965 U.S. coins, as one of the most undervalued and practical forms of silver ownership. It's divisible, widely recognized, and often trades close to spot, offering investors an affordable entry point without the inflated premiums now attached to silver eagles and other popular bullion products.
Junk silver's not. It's not. It's dimes, quarters, and half dollars minted prior to 65. But where I say it's the best value, if you can do anything at or near spot, which junk silver is, or maybe a little over, but not much, you're buying something that is the best value with no opportunity costs, with no added premium attached. And you put that in reference or measure it against where it's been in the past. During the pandemic, because of its utility and its divisibility, the premiums were second only to American Eagles. And the U.S. Mint has been the model of inefficiency for a long time. And I asked people to listen to Bixweir's interview with what's Jack's last name? I forgot Jack's last name. It'll come to me in a moment. But Jack Sermon developed the Silver Eagle program at the U.S. Mint, and Bix did a 3-part interview with him a couple of years ago. I remember almost falling off my chair, where he said he was approached by, at the time, his boss, which would have been the Secretary of Treasury, Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. I mean, he actually said that. That the primary distributors came to him with far more demand than they could fill. Like they wanted another 36 million and they gave him 12. And he said it really bothered him. So, there's a fine line between conspiracy and reality with the U.S. Mint. I would prefer Silver Eagles all day long, with many of these states looking at silver coins made in the U.S. as legal tender. But the premiums on Silver Eagles, on gold buffaloes, are crazy right now, and moving in that direction again. The fact that junk silver hasn't followed it the way that it did during the pandemic is testament to the fact that things aren't breaking apart for everyone to notice. This is just those who follow the U.S. Mint and their lack of capacity. But if I were going to say what is normally, I would say bars. But due to the threats all along this year of tariffs, the bar industry, or the products that are associated with silver bars, they're coming largely from Switzerland, and with Pam Swiss and Valcambi and others, they weren't imported very much. And so the premiums are higher on them than I like. Maybe 1 ounce rounds, those come from domestic refiners here, would be the next best. Or maybe even there are some coins like the 2026 Silver Kangaroo that we have in stock, or some of the other coins that are not American Eagles but are of the other 6 major mints, the Krugerrands, the Britannias, the Philharmonics. They're right there. And because the bar market is inflated, I skip it. So it would either be junk silver, 1 ounce rounds, or coins from probably not even the maple leaf, which is getting inflated again. It would be South Africa, Australia, UK. To me, would probably be the 3 that would stick out as being a good value right now.
What impact does China restricting exports of silver mean for us and the LDMA?
Well, I think it means a lot for the LBMA. Um, it because of this, and because the move to classify silver as a resource of national interest, that's China. And then you add the U.S. putting it on the critical mineral list, which means they too can curtail exports. The president can do it without congressional order. And then you look at the essential role of silver in solar panels, electric vehicles, semiconductors, defense, you name it. I think what it really does is it shows that both countries are viewing silver as a strategic asset. It's not a commodity anymore. You're looking at a potential supply crisis and rising strategic value. What starts out as a trickle turns into much more than that. And, the people watching this show and listening to others in the industry who talk about this are way ahead of the curve and think, well, geez, everyone knows this. But walk outside your bubble and talk to anyone who's well-read, reading the wrong stuff, mind you. They won't have any idea about any of this. And so we're a ways away from that moment where it turns into a stampede. But it will curtail, I believe, it will curtail supply. And in a market like silver that is so massively rehypothecated at the upper levels, meaning the same contract is sold over and over and over and over again, creating a real problem. Remember, the market cap of silver is the size of a pinhead. And you throw a bunch of money at it, and it doesn't just go up, it explodes higher. This is what they've been trying to hold back. And I think that the big money across the globe understands this. I think they understand that this is a rush to a quiet rush to accumulate the resources. And I think they know that that if they don't do this, they being all of the governments, and really work hard at protecting their own supply chains and their own strategic stockpiles, silver is a necessary element. It's necessary in moving energy. It's necessary in moving civilizations. As dramatic as that sounds, there is no element on the planet that conducts heat and electricity better than silver. People say copper. Copper's too slow. Copper's going up too. It's reclassified. But silver is a needed element. It is critical. And I think it will start to affect the supply chain. I think people take for granted for far too long how easy it is to get silver. I talk to people all around the world who have a next to impossible time of getting it all around the world. I get emails every day saying it's impossible to find silver. So it's been something we've taken for granted here in the U.S. I could see that rapidly changing if all of the governments start to say, hey, we better get into a protectionism type of mode and not sell this to the United States and to North America. Let's take care of our own first. And you could argue that's what the U.S. is doing right now.
Andy's observations underscore a deeper structural change within the global monetary system. For decades, Western markets treated silver as a byproduct of industrial growth, with paper contracts trading hundreds of times the available physical supply. But with China, the U.S., and other nations now classifying it as a national resource, that era is drawing to a close. Physical availability, not speculative leverage, is becoming the true measure of value. This dynamic mirrors what we've seen in gold markets, where central bank accumulation and geopolitical fragmentation have steadily eroded confidence in fiat-backed financial instruments. The distinction now is that silver's role extends beyond wealth preservation. It's a functional necessity in solar, EV production, semiconductors, and energy infrastructure. In this sense, silver sits at the intersection of finance and technology, bridging the old monetary order with the emerging industrial landscape. That convergence gives it a dual premium, one as a monetary hedge, the other as a strategic input in the energy transition. When both forces align, price acceleration becomes not only possible, but inevitable. At the same time, the rehypothecation problem, where the same silver is sold multiple times through futures contracts, remains an unspoken vulnerability in global markets. As governments prioritize domestic access and restrict exports, the mismatch between physical and synthetic supply could trigger significant dislocations. Investors holding physical bullion rather than paper exposure, will likely be the primary beneficiaries when that divergence surfaces. For individual investors, the message is clear. The consolidation of silver dealers, tightening of global supply chains, and reclassification of silver as a strategic asset all point toward a future where accessibility, not just affordability, defines the opportunity. Owning physical silver in whatever form remains one of the few direct ways to participate in this transition, and those who act before the next wave of institutional accumulation are likely to benefit most. If you found this breakdown insightful, make sure you're subscribed to the channel and turn on notifications so you don't miss the next deep dive into the changing dynamics of gold, silver, and the global monetary system. Thank you for watching, and as always, stay informed, stay prepared, and stay invested in what's real.